Welcome back. We are now seeing cracks occurring in the general economy like this. Companies like GM are starting to lay off their employees. Now, we're going to be getting into the layoffs and the general economy in just a little bit, but we are seeing crypto and stocks still hitting and holding at all-time record highs. In today's video, we're going to be exploring where we are in the cycle, what has occurred, and how these cracks in the general economy with the things like layoffs and the government shutdown could indicate where crypto and some of these stocks that are still at all-time record highs are headed. But we're going to be starting today's video right here with JP Morgan letting institutional clients pledge Bitcoin and Ethereum as a loan collateral by the end of 2025. Well, if it's not JP Morgan flipping on their thesis that Bitcoin and crypto is just not real money and not real anything. And yeah, let's get into it. Don't forget to give this video a free thumbs up. We upload every single day of the year to bring you the latest happening in the financial world. So make sure you're subscribed, give the video a free thumbs up, and let's get into today's video. Now, if you've been watching my videos, this is not really a surprise. I mean, we've heard from JP Morgan that they're going to allow crypto trading. They're going to allow their customers to interact with crypto, which means the bank is going to have to interact with crypto. But now they're taking it a step further and allowing you to pledge crypto, at least the institutions to begin with, as collateral for the crypto loans. JP Morgan plans to permit institutional clients to use Bitcoin and Ether as collateral for loans by the end of the year. This program will be offered globally and will rely on third-party custodians to safeguard the pledged assets. Now, here's the deal, guys. Remember, banks don't care. Their whole business line right now is just giving out money, is giving out loans. They don't care how it is done. And they just don't want to hold your money. They don't want to hold your collateral, right? All they want to do is give out loans and take interest in. And they do this very well to the tune of tens of billions of dollars pretty much every single quarter in revenue and also net profit. And so this is really important to understand that the bank's doing this. In my view, it's not that big of a deal. Yes, it's legitimizing crypto a little bit more as an asset that you can, pledge as collateral, same as like pledging real estate. But this is not something like people, the Bitcoin maxis are going to say, oh my God, the banks are getting involved. It's like they have been involved. I've been trying to tell my viewers this for literally years. They're just trying to slow it down so that they can figure out how they can make the most money and basically suck all the liquidity from the market. They don't want you to have the money. They want the money. But then we have companies like Fidelity, which has crypto trading on their platform in their brokerage. And you can also trade and hold crypto in your retirement accounts. I've been seeing a lot of people saying, Cryptoviser, there's this one company that does crypto IRAs. And I'm like, who are they regulated by? They're regulated by nobody, and they're not a bank. And if your money disappears over the course of the next, few decades, well, they're just going to say, well, it is what it is. But Fidelity is and has allowed crypto trading for multiple years now. If you go to fidelity.com/crypto, and what you can see now is they have added support for Solana. So now we have Bitcoin, Ether, Litecoin, and Solana that you can trade and hold. It's not as easy as Coinbase. There is a spread, but there are no fees. And again, you can hold it in your retirement account. So if you wanted to flip your entire IRA or Roth IRA into a crypto-related account, you can do that. Again, fidelity.com/crypto. If you didn't know that, make sure you guys are subscribed, because we literally have been talking about this for years and people are coming around now. I've seen posts on social media saying, oh my God, Fidelity has enabled crypto. It's like, it's been like this for many years. Anyway, we're also hearing Japan's Gumi company joins Ripple and SBI with a $1 billion XRP bet aimed at institutional domination. Well, I don't know if they actually saw what happened in Japan with their Bitcoin treasury company Metaplanet, but it was a pump and dump this year. But let's understand what's going on here. And by the way, it's very interesting. No companies in the United States have basically moved to an XRP treasury company or enabled Ripple payments and Ripple's network. No US businesses have done this in this cycle. And so we have a Japanese company that's joining Ripple and SBI. So it's like, what is Ripple actually doing? Because they're still based in the United States. And they basically have kind of the regulatory green light to kind of go and move forward with whatever business, lines they're looking to do. But it doesn't seem like they want to do any of that in the US. That is very interesting in my view. But let's understand what's going on here. Institutional adoption of XRP is accelerating as leading Japanese and US firms deepen their commitments to the digital asset. I wouldn't say all that, but anyway, Tokyo-based game developer and crypto strategy company Gumi on the Tokyo Stock Exchange 3903 announced in October that they invested $5 million in Evernorth Holdings, a US company building an XRP treasury business. I mean, again, this is basically the same thing as Metaplanet and what happened with Metaplanet. Let's actually look this up. 3903. Gumi, right there. And so this company is valuation 23 billion Japanese yen. What is that? What does that equate? 23 billion yen to USD. Okay, I thought it was just going to show. Hold on. So it's a $150 million market cap company at the time that I'm recording this. And you can see the 6-month chart. I'm guessing this is when they made the announcement that they were going to become an XRP treasury company. So this actually looks exactly like Metaplanet. Actually, let's relate the two. Yeah, they pumped and dumped at the same exact time. And they're basically Gumi from the middle of the year till now. I mean, you can see Gumi is only up 1%. Metaplanet is up 40%. And Metaplanet, I mean, it's had a massive drawdown. Gumi's down 25% on the month. So just in October alone, it's down 25%. Okay, definitely looks like institutional adoption to me. That's sarcasm. Anyway, the announcement followed Evernorth's unveiling of its NASDAQ listing under XRPN, as well as SBI Holdings' separate $200 million investment in the same initiative. It came on the heels of Ripple Labs executives expressing a unified and increasingly bullish outlook for XRP's role in institutional finance and decentralized markets. Okay, I don't necessarily think that shows institutional usage. Just holding the coin doesn't show usage of the coin or of the network. I want to see actual implementations of RippleNet utilizing XRP for cross-border payments. That's not what we're seeing. That's not what a treasury company is all about. But again, the XRP maximalist will say, Cryptoviser, you're just fudding. You're just fudding. It's like, no. I'm looking at the data and trying to understand how I can become bullish on this stock, on this crypto. And I don't see it. They're just because they're investing $1 billion to acquire XRP, and Ripple is very intertwined with SBI, and Ripple sells XRP on the open market every single month. How is that bullish? I don't know. I can't figure it out. But again, when we are at the end stages of the bull market, there's announcements of announcements of announcements and announcements. And basically, the only direction we actually move is down. Now, again, I'm talking about the macro. I'm talking about from end of 2025 into 2026. I believe that we're going to see massive drawdowns in many cryptos and these Bitcoin treasury companies, which brings us to the next topic. But before we actually get to the Bitcoin treasury companies, I saw this whale alert that 9 Casasious coins moved, totaling 9.5 Bitcoin. These were physical Bitcoins created in the early 2010s. And Casasious Bitcoins are actually really, really interesting. These were physical Bitcoins that actually had, you can see here on their wiki page right here, that they had like a sticker that had the wallet address and the private keys to actually access that Bitcoin. And there are still a lot of these Casasious Bitcoins that are active that have not been redeemed. There's ones with 1,000 Bitcoin on them. 2 have been redeemed. 4 are still active and not yet, haven't been redeemed yet. Whether they ever will be, I don't know. I would actually think that the value of these Casasious coins are higher when they have the actual Bitcoin still on them. You can see that some of them have 25 Bitcoin, 111 of those are still active. These were gold bars that had the Casasious coins printed on them. So yeah, you can pause the video right here and see all of the different series that they had and how many are active, how many have been redeemed already, but a lot have not been redeemed. And again, people have been holding these for well over a decade. And yeah, I mean, I definitely think that many of us probably wish we had a Casacious coin with 1,000 Bitcoin on it. Anyway, moving right along, this user Comic on X said the Sailor effect of MicroStrategy versus Bitcoin over the last 6 months. Bitcoin is up 15.7%, and MicroStrategy is down 20.5%. Is this amplified Bitcoin and intelligent leverage at work? Strategy. And I would completely agree with this, guys. The whole thesis of Bitcoin treasury companies, this trade is over. And there's still people in the trade, even though it's down 20% over the last few months. I mean, I actually just saw Jim Chanos on, I think it was Bloomberg. They were interviewing him about many different topics, but they talked to him about MicroStrategy. And he's still short. He's been short multiple months, and he believes, his firm believes that they should have a 1 MNAV. And currently, it's still about a 1.3, 1.4 MNAV, meaning that there's still more drawdown, at least in the Bitcoin price and the MicroStrategy price, that needs to occur to reach that. And he has not covered his shorts yet. I don't think he's going to cover the shorts until we get close to that 1 MNAV. But again, a lot of these Bitcoin treasury companies are now under 1 MNAV, if they're even a company. He also highlighted that it's been 6 months since Jack Mallers and Tether's Paulo Adorno announced 21, currently under the ticker name CEP, or Cantor Equity Partners. This was going to be a Bitcoin treasury company. They were one of the first to announce. After the election, you can see right here in April, the stock price went for Cantor Equity Partners went from $10 all the way up to $50, a 5x. And it's come down, I mean, ever since. This is in the year-to-date chart. You can see from the top of that market to now, we're down 60%. And a lot of this, I think, has to do with the fact that they're still not a merged company. They haven't been approved by the SEC. He says still no progress that can be shared, which is frustrating as more and more shareholders dump their shares. He said, this user Comic said, I'm giving myself until the end of the year for something to change before I also dump my position for a loss and rotate into things that are actually real. How does Cantor and this team take 6+ months to close a deal like this? Well, guys, that's what you call euphoria in the markets, right? It's that there were so many of these companies that were trying to convert to a Bitcoin treasury company. Anthony Pompliano's company, I think their ticker name now is BRR. It was ProCap. They were the same situation, right? And most of these companies are down 90%. We just looked at Metaplanet a few minutes ago. Nakamoto, Strive, ASST is down under $1 at this point. And again, they're acquiring in an all-stock transaction Semler Scientific, which is another Bitcoin treasury company. And at the end of the day, you know, I don't know whether these companies are actually going to get the SEC approval or not. I think the government shutdown has delayed things, but even before that, why wasn't it approved? But again, we're so late in the cycle for this user Comic to say that he's going to give himself till the end of the year. Again, I've showed my viewers on this channel the Bitcoin halving chart, and the Bitcoin halving chart shows that we are now well beyond the 550 days since the Bitcoin halving, which historically in every single cycle has been the top of the market. We have not gone above that in every single cycle before. And so that's 18 months after the Bitcoin halving. We're past 18 months after the Bitcoin halving, which occurred in April of 2024. And so what happens after we exit the complacency phase or the bull cycle? We go straight down. You can see that on the psychology of market charts. And so in the complacency phase, everybody's waiting for the last pump. Oh, we're going to hit new all-time highs. Maybe we won't hit $200,000 Bitcoin, but we'll hit $150,000 Bitcoin. Maybe we will. Maybe we will. But in my view, the risk reward is no longer there, where the risk now outweighs the reward. And listen, I don't know this person's, financial portfolio, and I'm not a financial advisor, but a lot of people are probably saying this, and you have to have a thesis and a strategy in your portfolio. That way, you know when you need to exit a position, and it should be based on data, not based on a time frame necessarily, right? Because a lot of people in this market think, oh no, Q4 is always a good time to buy in the cycle and a good time for the cycle to move higher. Well, not in 2022 after the FTX collapse. We actually saw a major bear market during that time frame. So, look at the data in the market, and this is what the data is showing. This user on X is an investor and a corporate attorney at Duke Law, Jesse, said thoughts on Bitcoin treasury companies. One, if a company approaches potential investors with respect, they'll get respect in kind. Repeatedly telling investors and critics that they are simply confused or lack conviction and don't get it does nothing for persuading anyone. And we hear this in the Bitcoin treasury space. Oh, well, you don't actually understand accretive value, Cryptoviser. You don't understand how this is actually Bitcoin per share. It's like, no, I do understand. I just believe it's bullshit. Anyway, many folks have paid close attention to the larger Bitcoin treasury companies pouring through the SEC filings and discussing the businesses ad nauseum. There are many reasonable critiques and uncertainties. Companies should try to understand them. He said, number two, Bitcoin per share and Bitcoin yield are inadequate as valuation metrics as they fail to incorporate the perpetual liabilities of preferred stock and the drag of operating expenses, both of which, of course, impact valuation. Share price is not irrationally diverging from Bitcoin per share and Bitcoin yield. Those metrics reflect the value of the Bitcoin assets, but fail to fully reflect or predict the company's value. Now, this point in particular, we saw very clearly when MicroStrategy, they started using the new accounting rules, which allowed them to utilize their Bitcoin on hand as part of their unrealized capital gains, as part of their profits and revenue, which is BS. But you can see that when they made their earnings call in the end of, I think it was the end of July, early August, the market called BS. They said they made $30 billion, something like that. Yeah, look at this. They made $10 billion in the quarter in profit, quote unquote profit, even though they had no money, and they still have no money. And they thought this was going to be a good thing. All the MicroStrategy bulls were like, oh, well, look, MicroStrategy just reported that they made $10 billion in profit. No, they made nothing. And the market understood that. And that's why the price keeps going down. And so MicroStrategy, by the time you're watching this video, they probably already have reported their earnings in October, early November, by the time you're watching this video. If not, it's coming. I think the same thing is going to happen. I think the market is going to say, oh, no, this is BS. These are fake metrics. No other company in the history of markets values their company based on, Apple owns 1 billion iPhones that they haven't sold and they're not going to sell. They're just holding them. So they technically are making, $100 billion in profit just because they're holding these iPhones. No, that's nonsense. It's nonsense. Anyway, but again, going back to Jesse's first point, the MicroStrategy and Bitcoin treasury bulls, they'll say, no, Cryptoviser, you don't understand accretive value with Bitcoin per share because Bitcoin yield and Bitcoin per share show accretive value to the shareholder. And I'm like, no, I don't understand what the F you're saying because it makes no sense and it's financial gibberish. Moving right along. The value, he said, number three, the value of preferred stock to a company is understood. If you can borrow and buy Bitcoin today and slowly pay reasonable interest on the debt in the future, then the company itself should generally grow. But the question is, one, what is the demand for the preferreds generally? Almost nothing. Two, what is the demand for the preferreds issued by a company other than MicroStrategy? None. And three, how does the perpetual liability of preferred dividends impact the value of the common stock? It's bearish. Preferred buyers are fixed income investors who tend to want low risk, low volume assets. The buyers of preferred stock issued by a Bitcoin backed company that has no operating business must believe A, Bitcoin is going up, which it generally over the long course of time will be, but we're going to have corrective phases. We're going to have bear markets in between, right? B, the issuers deserve a premium to NAV on its common stock price, which they currently have. And C, buyers will forever exist at that premium to facilitate the common ATM needed to finance the preferred dividends. And that's the problem. Because right now, the stock price is holding up above 1 MNAV because there's still buyers. But if we rotate into a bear market and the Bitcoin price goes down and the share price goes down, nobody is going to buy the stock in a downward trending market. And we're already seeing that because they're having harder and harder and harder time selling shares in the open market without significantly impacting the price. Remember, just a few months ago, we were at over $400 in MicroStrategy. Now we're under $300. And most of that is because of dilution, not because the Bitcoin price has gone down, because we're still at technical all-time record highs in the Bitcoin price, but we're not at all-time record highs in MicroStrategy. Do you see the problem here? And by the way, we're talking about MicroStrategy specifically because they're the largest, but this happens with all of them. Look at what happened with Nakamoto. Look at what happened with Strive. Look at what happened with Semler Scientific. Look at what happened with Metaplanet. That is going to occur with MicroStrategy. The same way Celsius, Voyager, Terra Luna, 3 Arrows Capital, and BlockFi all went down, and FTX stood its ground. But once FTX collapsed, everything collapsed. Continuing on. If a company, he said, number 4, if a company has marginal management flexibility, the trade-off is a minimal investor certainty. Flexibility comes in the form of governance structure, controlled companies, multiple share classes with different voting rights, classified boards, poison pills, and other defensive provisions, discretion to buy or sell common stock and blank check preferred in large quantities as desired, etc. That is not a controlled company. It's just we're going to do what we want when we want to do it, and you as a shareholder are going to have no say and no understanding of where the risk is until after. He says a company with every tool available to it is unpredictable to an investor absent significant guidance and communication from the company and a track record. To succeed with maximal management flexibility, a company needs significant shareholder trust. What has a company done to earn or lose that trust? Has the company communicated how it intends to operate? Under what circumstances and in what amounts will it sell common stock to the market? What is its target leverage ratio and how do they view preferred stock in this calculation? How much clarity does the market have around the cap table and our incentives of management properly aligned? Good question. Number 5, he said Semler Scientific traded at $29 per share when it adopted a Bitcoin strategy and had 929 Bitcoin. Bitcoin was around $68,000. Semler closed $22.53 a share, which is a $7 price difference on the day that this post was made, and had 5,021 Bitcoin. And Bitcoin is around $109,000. So they have 4,000 more Bitcoin. Their share price is down $6.50, and the price of Bitcoin is up almost double from when they purchased. This is a resounding failure for shareholders of the first company to attempt to copy MicroStrategy. What do we take from this? Well, Jesse says Bitcoin treasury companies can be measured against Bitcoin, but to be attractive, they really need to outperform other forms of leveraged Bitcoin exposure, like Bitcoin bought on leverage or IBIT call options. And I would agree, guys. Why would you buy a stock knowing that the company is going to sell more shares and dilute your shares? People are like, well, Cryptoviser because the Bitcoin yield, the Bitcoin per share go up. It's like, it's not your Bitcoin. Because if you're holding MicroStrategy, the Bitcoin, you're last in line to get that Bitcoin in the event of a liquidation. So technically, it's nothing. And why wouldn't you just go buy the Bitcoin yourself versus buy it through that? Or why wouldn't you just go buy IBIT, which is a Bitcoin ETF, or any of the other Bitcoin ETFs? Again, I don't know whether these people are paid, they're bots, or they're just lower IQ. I don't know what the answer is, because it should be clear to any investor. I mean, most of my viewers get it. You guys definitely get it. I mean, we have tourists on the channel that come on and say, but Cryptoviser, you're missing the accretive yield. And I'm like, anybody who uses the word accretive, I just think is BS. The Bitfarms CEO actually said accretive on the the Twitter spaces they had recently, and I started rolling my eyes like, oh, he's saying the word accretive, 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 because it's just nonsense. Most of the people who use it don't even know what it is, right? Anyway, continuing on, because I can go on about this all day. Number 6, Jesse said Sequins, which is another Bitcoin treasury company, their share buyback has not worked thus far to defend the 1 MNAV. Where do we take from this? And number 7, he said it's difficult to get a man to understand something when his salary depends on his not understanding it. Incentives matter. Very interesting take on this, Jesse. Meanwhile, in the meme coin space, Cointelegraph is cheering on, saying this is bullish. Coinbase's Base network leads the market with over 800,000 meme coins launched in October, the highest among all chains. Okay. I should have had coffee ready for this video because this is quite the video. Meme coin launches on leading chains. And you can see Base, 311,000 in the third week, 254,000 in the second week, and 800,000 meme coins launched. How is this bullish? This is called value extraction because there's no fundamental value in these meme coins. There's no projects in these meme coins. There's no long-term increase in valuation. These are liquidity sucks. That's literally what we saw last year. Solana, Haktua coin, the Argentina coin, all of these meme coins that were launching, all the celebrities that were launching coins saying we're going to change the world with the coin. All they changed was your wallet if you were buying. I mean, just go look at Dogecoin. Dogecoin hasn't even really performed this cycle. Shiba Inu coin, Floki Inu, none of these meme coins, these high market cap meme coins performed. Why? Because these coins, these meme coins, sucked all the liquidity out of the market. And a lot of people are upset that we haven't had altcoin season saying, Cryptoviser, you're just being a bear. We're going to have altcoin season. Just, patience. Guys, I've been waiting for over 4 years for alt season, and we still don't have it. And I don't think that we're going to have it. We had it last year, and then the meme coins popped up and the celebrity coins popped up and sucked all the liquidity out of the market, and there's nothing left because nobody took profits. I mean, even Ethereum has barely hit its all-time record high. It hit like $4,900, came right back down. It's not even above 5,000. And we were expecting 10,000, 20,000. Some people were even saying 50,000. Not going to happen. And people are like, no, just wait a few more weeks, Cryptoviser. A few more weeks, we're going to be lower, not higher. We may be higher, but the higher we go, the closer I mean, guys, the further you go in this cycle, the closer you are to the bear market. And I've been saying for 6 months, you may want to take profits off the table. You may want to take profits off the table. People are like, no, Crypto, I just got to wait a few more weeks. The closer we are is the further we go. And so we've gone 6 months. And I've been effectively correct, calling the top of the market at about $110,000. We went to $120,000, which is not that big of a difference. It's a 10% difference from when I called the top of the market. And we came right back down. And there's no support at that level. And there's all these risk factors occurring here. And people are like, no, Cryptoviser, this is bullish. It's bullish. Then keep buying. But when I see this meme coins, 800,000 have launched and they're cheering this on as bullish. How is this bullish? These coins don't do anything. They don't do anything. Meanwhile, I want you guys to listen to this. Stanley Druckenmiller nailed this according to this user on X, Stock Savvy Shay. He said the present is already priced in. You have to position where fundamentals are going. And I would agree. This is where you hear buy the rumor, sell the news. The rumor is the market pricing everything in. The news, like for instance, Federal Reserve is going to cut rates. Everybody's like, this is bullish. No, the market is pricing that in right now. But once they announce, oh yeah, we're going to cut rates, even though we're having a really bad economy, even though people are getting laid off, we're about to get into that in a second, all these macro factors that are negative, people are ignoring because they're like, oh no, the Federal Reserve is going to cut. It's like they're cutting because the economy is not doing well. That's not good. And it's not even money printing, right? Quantitative easing is money printing. Them raising how much they're printing is money printing. Just lowering the interest rate is not money printing. And a lot of people don't get that. And so this is where buy the rumor, sell the news. So this is where they start talking about AI and thinking about what is next, right? The Bitcoin trade, in my view, is over for this cycle. So what are we pricing in now? We're pricing in a downtrend. We're pricing in AI. We're pricing in other sectors of the economy that are going to do well as Bitcoin doesn't. Let's listen in to Stanley Druckenmiller.
In your fund, the answer is no, unfortunately. You must have made a lot of people a lot of money, and
This is Stanley.
applying these same things. So talk about your investment philosophy and why you got those types of results. How did you do it?
Well, my idea of risk control is a little non-conventional. I like putting all my eggs in one basket and then watching the basket very carefully. I think, I don't know what they teach at Marshall, but at most business schools they teach, I think, a lot of nonsense called risk-adjusted return and diversification.
Ouch.
As a money manager, if you look at a normal portfolio, most people will make 70, 80% of money that year on 2 or 3 ideas, even though they'll have 30 or 40 things in their portfolio. My concept was to put into those 2 or 3 ideas that I had the most conviction in. I was also lucky to travel across asset classes, so I traded commodities, currencies, bonds, and equities, and it gave me the discipline. If I didn't have a good idea in equities, I was happy to have no equities, or the same thing with bonds. So when you have a quiver with a bunch of arrows in it, you can usually find something to put a lot of money into. The only other thing I'd say is too many investors look at the present. The present is already in the price. You have to think out of the box and sort of visualize 18 to 24 months from now what the world is going to be and what securities might trade at. What a company's been earning is ridiculous. It doesn't mean anything. What you have to look at is what people think, what a company's earning, what people think it's going to earn, and if you can see something 2 years that's going to be entirely different than the conventional wisdom, that's how you make money. My first boss used to say the obvious is obviously wrong. If you invest in conventional wisdom, you're going to lose your butt.
Well. Sounds like we've been listening to Stanley Druckenmiller. Actually, this is the first time I've heard him give this this kind of insight into his viewpoint. Because there's a lot of investors that they have a million positions, and what he's saying is you have to have very high conviction positions in the market. And if you don't have any, pull out of the market, right? I mean, I've told my viewers, like, we are at the end stage of the cycle. And the conventional wisdom is, no, the extended cycle. We have a 6-year cycle now. It's a 5-year cycle, Cryptoviser. This time is different. No, it's not. And even if you think it is, fine. Go invest the way that you want to invest. But personally, I'm out of Bitcoin. I've been out of Bitcoin. I'm not just saying we're at the top to say we're at the top. I'm saying we're at the top because I really do believe that it's the top of the market and that we're at the end of the cycle. The Bitcoin treasury companies, I think that trade is over. The only people that really think that it isn't are the people who are still holding the stock. Guys, I was holding MicroStrategy in the bear market. Like I don't think I owned MicroStrategy at all in 2025 in this quote unquote bull market, right? Because once I saw Michael Saylor selling his shares in 2023 into 2024, and the investors now they're like, no, Cryptoviser, he has 20 million shares. What are you talking about? You're lying. And they have no understanding that he actually sold the shares and then he converted other class shares back into regular class shares. Now he has 20 million again. That told me these people don't know what the F is going on in the markets. And so you got to counter trade that. You got to counter trade the conventional wisdom. Bitfarms. We talked about Bitfarms many different times. We talked about the Bitcoin treasury companies, and I told my viewers over and over and over on this channel, I said, guys, we have to look for these Bitcoin mining companies that are pivoting to other things, because if not, they're going to go bankrupt in the bear market. Same thing that happened in the last cycle. Core Scientific went bankrupt, right? And what did they do? They pivoted and they moved into AI. Bitfarms was doing this back in 2024. They were already pivoting. Riot Platforms was trying to take over the company. They said, no, we're not going to let you take over. That was probably a good bet on their end. And guess what? It's doing very well right now. Is it going to continue to do well? Well, we'll have to wait and see, hopefully. But, again, once everybody knows about a trade, it's no longer the trade. Once people are trying to people come on my channel, right? I've had this channel since 2018. We talk about Bitcoin literally every day. They come on the channel, they're like, well, Cryptoviser, you don't understand that because of the business cycle, this cycle, we're going to have an extended cycle. And I'm like, You're acting like you just learned about Bitcoin and you're trying to convince me and tell me what I should know about Bitcoin. Like, I know everything there is to know about Bitcoin. People are cheering. Michael Saylor is going to go on Joe Rogan. And what the hell is he going to talk about? The same shit that he's been talking about for the past 4 years. Nothing is going to be new. Nothing is going to be interesting. Nothing is going to be exciting. I don't even think that he's interested in talking about it anymore because he just repeats himself over and over and over because there's nothing new. There's no innovation there, right? And so people get tired of that and they move on to another sector of the economy. This is exactly what Stanley Druckenmiller is saying there. And so that's where we are seeing these high conviction plays like Iris Energy, Bitfarms, TerraWolf. By the way, Jane Street just took a 5.4% position in Bitfarms. So now they own 5.4%. This is another Jane Street, 1.4%. And this is another one, 1.8%, 2.2%. So overall, they own, let's just do the math on that. Okay, 5.4 plus, where are we? 2 plus 2, 2 times 2 plus, you guys get it, plus 1.8 plus 1.4. So Jane Street owns about 10% of the entire company of Bitfarms right now. And this may have been some of the big purchases that we've been seeing on the Bitfarms stock more recently, these at-the-market orders to purchase large quantities of the stock. And I don't think it's the end. I think that we're going to see more and more companies buying in to Bitfarms. We'll have to wait and see about that, but these are examples of this. TerraWolf is another example. I've been talking about TerraWolf since it was under $2 in the dollar range. And now TerraWolf has a partnership with Google. Google owns 15% of the company. And by the way, at the end of October, TerraWolf just closed a $3.2 billion deal for raising more capital to accelerate their data center expansion. Now, whether this is going to pay off in the longer term or not, I don't know. I mean, we've already gone up from, again, under $1, a 10x, right? We were right here. This is $2. I mean, but we've been talking about TerraWolf since the bear market here in 2023 in the dollar range. So if we go from $1 till now, that's a 10x. So there's also things that people are not pricing in, right? In NVIDIA's CEO, Jensen Huang, just said that the other day that NVIDIA went from 95% market share to 0% in China. Now, I did some digging off the channel about NVIDIA's stock, and the China market, NVIDIA was 95% of the China market. This was only about, from the data that I can see, about 20 to 30% of NVIDIA's yearly revenue. But the stock is still at all-time record highs. The market cap is still larger than the entire crypto market combined. And so I think that there is risk here. I don't think that the market has priced in the exit from China due to the trade deal. Now, by the time you're watching this video, we'll already know kind of what the meeting between China's president and the President Trump looked like, because that's happening at the end of October. But I don't think that things are getting better between the trade war. I think it's actually going to continue at least for some time, and that the exit of NVIDIA from China is going to continue for some time. And again, I don't think that the market priced that in. So going back to what Stanley Druckenmiller said about looking for outside of conventional wisdom, this is the most valued company in the history of the planet from a market cap perspective, literal all-time record highs. And they just left the largest market in the world where they had 95% market share in that country, completely wiped out in one swoop and no movement in the price of the stock. Yeah. I have taken positions to reflect that, because I don't think that they're going to be able to offset that with more sales in the U.S. There's only so much demand in the U.S. when China is such a larger market, and so we'll have to wait and see about that. But again, we have to look at what's happening in the U.S. economy, because this is where we are. This is where we're investing. GM lays off hundreds of workers while restructuring its design engineering center. Rivian has laid off more than 600 workers. Target is eliminating 1,800 corporate jobs. as it's reclaimed. And by the way, from my understanding, they have been already eliminating thousands and thousands of positions all year in 2025. And this is just more of the recent. I mean, their CEO was just recently resigned, and there's going to be a new one coming in. And I don't know if you've been in a Target store in the last few months, but it's not. It's definitely not like it used to be, and there's definitely a barrier. And I think that there's better options out there for purchasing what Target has, and I think that they've lost a huge customer base because of that. And then you can see here, Charter, one of the large, cable companies in the U.S., they're laying off around 1,200 employees to streamline corporate roles. And so, where are all these people? Like, how is this going to impact the economy? All these people losing jobs, and this is not even taking into account the government shutdown and all the furloughs that they've occurred in the government sector. And I would imagine a lot of these people are sitting around like, oh yeah, I'm just going to get paid once they reopen the government. But what if the government doesn't reopen for a long time? I mean, this is part of what Trump has stated he wants to do. He wants to reduce the size of the government, get the budget in order, and reduce the debt. I mean, the U.S. debt, if we go to usdebtclock.org, the U.S. debt just surpassed $38 trillion. You can see that right here. When I started this channel, it was 19 trillion. Now it's doubled in just the amount of time that I've had this channel up and running. And so I don't think that a lot of this is being priced in. I don't think a lot of the risks are being priced in. I think in the long term, everything's going to work out and things will be good. But in the short term, these things are going to have impacts on the economy, on the markets, and on crypto. With that, let me know what you guys think down below in the comments of the video. Don't forget to give this video a free thumbs up. Hit that subscribe button, turn on notifications, and let me know where we are in this cycle, what you agree, what you don't agree with in what we discussed. And I'll see you on the next video. Crypto on.